So we start with Nike, of course. It is the largest. It's got the shoes, it's got the equipment, it's got the accessories and all the rest of it. It's a company headquartered in Oregon because that's where it was started by Phil Knight back in the 1960s. Market cap, $88.75 billion. Do you know that it was close to $100 billion? So that's going to give you a sense. We'll look at the chart in a minute. It hasn't had such a great 2016. Dividend yield of 1.35%. Let's go straight to the share chart because it was the worst performing stock on the Dow Jones Industrial Average in the course of 2016. And perhaps to some extent it was because it had a really riveting 2015 where it was taking market share away from Adidas and then felt like it was giving it back, I guess.
Yeah, so very, very disappointing 2016, as you said, laggard within the Dow, which is no mean feat. But you know, this is a behemoth in the space, and it takes a lot to bet against them. That brand is just so iconic and so powerful, and they're really focusing on getting their product set right. So they've been accused of having too many products and too many ranges. So they're focusing that a bit. That will increase the use of inventory and hopefully
I definitely noticed that in the stores where you used to have lots and lots of different shoes. They now got like 3 or 4 key ones that they're really pushing hard in different colors.
Correct. So they're trying to focus that a lot more. But I think where the growth area is coming from is what they call direct to consumer. And that's their own branded stores.
I'm glad you mentioned that because I think one of the reasons that share price looks so lousy is that people got confused. They used to track the sequential distribution numbers to their wholesalers, which is like to third-party Sportsman's Warehouse type stores. But Nike's selling much more stuff either through its own concept store network or online.
Correct.
That's actually where people's attention should be diverted.
And that's where you want them to be buying because you don't have to sell at a wholesale rate to the middleman. So that's growing at 30% a year, and that's quite exciting for the group.
Okay, so really it comes down to how will 2017 look? We know that the year-on-year comparisons probably will look a bit better because, yes, Adidas has been a bit resurgent, but they are the #1 seller in all of these top markets, and there's lots of growth in the international market, etc., etc.
Correct.
So the productivity increases, the manufacturing, the good, cool shoes with the Flyknit technology and all that, that's all good. Only one thing that I just want to check with you is that Trump has made some noises about, like, if you import a lot of stuff into America and try to sell it there, then he's going to hit you with some kind of import duty. Is that realistic, or do you think it's also...
Look, I think it's more politicking. It is a possibility, but I think it's a real small one at the moment. That will affect many, many multinationals. And that obviously has an impact on tax revenues.
Because obviously the companies like Nike would immediately say, okay, well, if there's that, we're going to have to hike prices. So I guess the question would come, like, you know, because I don't think anybody makes sports shoes in America for America.
Too expensive. Yeah,
too expensive. Okay, hot or not? Current
hot,
price.
yeah, hot for me. Notwithstanding, you know, the bad year they had last year, I think they're well positioned. I think these trends will continue, and I'll definitely back them not against.
Good. So I'm hot on that one too. I think it's probably most attractive at this level. Big holding already in our hot stocks portfolio.